The United States finds itself in a very delicate situation where economic policy and national security seems to intertwine like never before. The reason? U.S. debt, stock markets, interest rates are becoming pivotal, not just for the financial health, but for our national survival. Let's talk about it. Okay, so I want to take a quick minute, share some thoughts in reference to just the world that's been built around the idea of stocks always need to go up. But what if we reach a point to one day they do not go up and there's a severe correction beyond anything we've ever witnessed before? How will the government respond? That is something a lot of people don't think about, just because all we've known is the illusion of everything must go up. And as it goes up, we feel wealthier because everything appears to be very positive in nature. But then again, we're in an uncharted territory like we've never witnessed before due to fiscal indebtedness. Our government is just overly dependent upon debt. And then the monetary policy. The central bank doesn't know how to do anything other than create currency to fund these bubbles. And so those two realities can't remain forever without something giving. If not, both of them come crashing down. So in this video here, I just want to share some thoughts in reference to how we could just try to put the pieces of the puzzle together to think about things well beyond what we're hearing from mainstream news. And so as always, if you guys want to hear more of these short takes, hit that thumbs up button. Make sure you subscribe, hit the bell notification, so when I release a video, you guys are informed. But I want to start from the beginning. So let's break it down. The U.S. is the issuer of the world reserves currency, currently the Federal Reserve note, aka the dollar. And this status has granted immense global influence. So for decades now, the U.S. dollar has been the center of global trade, backed by U.S. Treasury bonds as the most trusted financial assets. But cracks are forming in this dollar-centric system. Why? Because the U.S. has been piling up trillions of debt. And the only way to keep this unsustainable system afloat is by ensuring that interest rates remain below inflation rate. So in other words, negative real interest rates. So in other words, the U.S. needs negative real interest rates to make its debt manageable. Now, this creates an alarming dynamic. So if the U.S. economy slows down and stock markets decline and remain low, the country's tax revenues won't cover its growing interest expenses. So that's not just a budget issue, it's a matter of national security. So if U.S. receipts can't keep up with interest payments, the country faces an existential financial crisis. So what does it all mean to investors? First, understand the scale of what we're looking at here. The U.S. government has accumulated $35 trillion in debt. So to put this in perspective, that's about 123% of its GDP. So historically, when nations carrying this kind of debt, they either default or devalue their currency through inflation. So since defaulting isn't an option for a country that issues the world reserve currency, devaluing the dollar becomes the only way out. But here's the kicker. This can't happen without real world consequences. So when inflation outpaces rates, the value of the dollar erodes, causing international investors to lose confidence in it. So central banks around the world have already started moving away from storing U.S. treasuries and are buying up gold instead. Just look at the recent price action. In fact, global central banks have bought around $500 billion worth of gold in the last decade alone, while selling off $300 to $400 billion of U.S. treasuries. So this shift away from the dollar is slow but undeniable. And so China, Russia, and others are increasingly pricing their commodities in currencies other than the dollar. So like the Chinese yuan, the Russian ruble. And so others might not topple the dollar's dominance overnight. It erodes the foundation of the U.S. financial supremacy, making the future of the dollar less certain. So where does this all leave us? So the U.S. government needs the stock market to keep rising to generate enough tax revenue to cover its ever-growing expenses. So if stocks falter, it's not just investors who lose out, the entire system teeters on the brink of collapse. So this is why, according to experts, the stock market has become a critical factor in national security. So it's a tricky balance. The government needs to inflate its way out of debt while triggering a complete loss of confidence in the dollar. And this balancing act affects everything from interest rates to inflation, and most importantly, your investments. So for those navigating this precarious environment, it looks like gold and a lot of cryptos that are being used as a speculation play have emerged as assets worth playing with. But gold in particular has long been viewed as a hedge against inflation and currency devaluation. So with central banks snapping up gold at record rates, its role in the global economy seems poised to grow. And so because everyone's talking about Bitcoin, you can't dismiss that because it's the banker's preferred medium. And it's gained traction as well as a digital alternative to gold. So it's because it's offering decentralized protection, supposedly, it's also being used as a safe haven asset as well. But meanwhile, U.S. industrial stocks, especially those tied to reassuring of manufacturing and infrastructure development, offer some upside in an inflationary environment as well. So both major political parties, whether it's Harris or Trump, seem to support policies that emphasize U.S. industrial strength and energy independence. So which could benefit sectors tied to these goals. So in this volatile landscape we live in now, one thing is certain: the days of easy U.S. dominance through debt-fueled growth are numbered. The system has kept the dollar at the center of global finance is under extreme pressure, and investors need to prepare for a future where negative real rates, rising inflation and geopolitical tension define what the financial markets will look like. And so once again, if everything is predicated on the idea of prices always going up, what happens the day that they don't? That's when we're going to be in a whole new world that we've never seen before, and has everything to do with this instrument right here, the Federal Reserve note. And so long as this thing is the center of our universe, we're at the whims of whatever they choose to do, them meaning central banks, as well as the federal government and their ever-increasing need for more debt. And so we, the users of these currencies, are caught in the middle, unfortunately. And that's why it's always good to have alternatives. Because at the end of the day, all dollars are not created equal. And so right here in my hand here is a silver eagle. This instrument right here is nobody's counterparty risk. It is not subject to the central banks or the federal government, whereas in this instrument is. So it makes it very easy to tell you or to recommend where you might want to consider ending up when all this stuff comes crashing down. And of course, that's in physical gold and silver. And if you're interested in gold and silver, there's a lot of strategies out there. But the one that has the most promise from what I believe is the silver network, where you can actually be involved with it, saving silver, working silver, and help other people along the way. And that happens to come with this hefty kit here from the silver team, where you get a chance to add coin by coin according to what you can afford. So if you guys are interested in finding out more about that, links in the description, mysilverteam.com. And last but not least, gold notes. 24 karat gold notes infused into the fibers, giving it intrinsic value that can't be printed away. And so as all these things continue to fail, it's easily absorbed into things like this. And if you guys are interested in finding out where you can get these at, go to buygoldnotes.com. Links in the description. You can take a look as well as get yourself some if it's something of interest to you. But once again, just checking in, sharing with you some things worth keeping an eye on, because right now, with this Fed cut, they about to cut the spigot on, so stocks are going to go higher. But then again, at some point, things must correct. And then what? We're going to find out. But anyway, sharing some thoughts, curious to hear what you guys think. Drop a comment, subscribe, and I'll catch you guys later.